All right. Not only am I a growth marketing guru, I'm also apparently a fintech guru. But the only thing I love more than growth marketing is fintech, which has to be one of the fastest growing industries and verticals going on today. We have two amazing CEOs on stage, Yoni of eToro, and you're looking strange, but like Charlie of
He's
ComplyAdvantage.
thinking at least one of us is amazing.
And so today we want to talk about, fintech is getting huge amounts of attention. There's been dozens of unicorns, money all around the world in Europe and Asia and the United States. But how do you just get started in the fintech space? How did you two learn the market, the space, the regulations, and how did you launch your companies?
So I've been passionate about finance and capital markets since I was a kid. So I started trading shares because I got some shares from my father for my bar mitzvah, which is when you're 13. So I started trading, sort of fell in love in the markets. At the same time, I was a programmer, so I love the connectivity between finance and technology way before it's been called fintech. I think in general, fintech is something that requires a lot of passion because it's relatively complex, whether it's trading or investing or compliance, which you certainly do need to have passion to work with. I think it requires a lot of passion because it requires people who really sort of understand the problem, understand the market, and it's still not really everyone who understand how financial services work on the back end.
What about yourself?
I think similarly to Yoni, I started in fintech before it was called fintech. So back in 2009,
It's
my
like the hipster, kind of thing,
Yeah.
before it was mainstream.
Claim to fame, yeah. When it was super underground and it was unsexy and it was called invoice finance or share trading or as in I think now it's kind of super sexy like fintech, regtech, prop tech, whatever you want to add the suffix to. It can be tech.
You
and
guys
big
sexed it up.
We sex a lot of things up over here, yes. But how did you get started, though? I mean, what was sort of the first project that got you into fintech?
So I guess when the world was collapsing in 2009, myself and a friend thought, hey, it's impossible for anyone to get a loan. Let's go out and try and start lending to companies. And of course, in doing that, I discovered that I could go to jail. As in, if we were lending money to the wrong person or company. And so, having studied politics, I was just fascinated by the potential that in trying to lend money, the money could be going to ISIS, the Taliban, Al-Shabaab. And I guess the kind of moral case, so the kind of structural foundation of fintech is the movement of money. And therefore, if the money can be moved, so terrorist financing is the opposite of money laundering, in that terrorist financing is taking good money and making it bad, whereas money laundering is taking bad money and making it good, right? So I think that really captivated me, and I wanted to find a solution to it.
Got it. And obviously, I mean, 2008 is interesting. When was eToro founded?
2007.
2007. So you both kind of went through the financial crisis, not a lot of fintech going on, but it's really kind of the opposite today. I mean, there's tens and tens of billions of venture capital that has flown into the market. Apple, Facebook, Google, a lot of big tech companies are putting huge efforts into payments and other fintech products. Is now still a good time to get into a fintech market? I mean, if there are founders in the audience thinking about this space, is there still a window of opportunity?
I think generally, fintech is still underestimated, actually, by most people. So obviously, the people who fund, the big funding rounds of all the big fintechs probably do estimate the potential size of the market. But when you go into every single country in the world, you'll find 5 big insurance companies, 5 big investment companies, 5 big banks that together are probably north of 50% of the market cap of the local stock exchange, which on its own is another probably 5 to 10% of that market cap. So if you think about the market cap in finance, it's huge. It's bigger than technology. But today, when you go to each of these countries, if I'll rank now the top 4 banks in Australia, most non-Australian customers here would have no idea who I'm talking about. We just had this survey on retail brokerage across UK, Germany, Italy, Spain, Australia, and a couple of other countries. There wasn't a single name running across all of the top 10 in all of them. So the world of finance is hyper-local. The opportunity in technology is creating economies of scale and creating global platforms. And the opportunity of creating those global platforms with obviously tech multiples is still an underestimated opportunity by most.
So I think the same question is, was 2000 a good time to go into online retail? And I think retrospectively, like, absolutely. So the question is, like, can the incumbent get the innovation before the new entrant gets scale? And I think like, if the question was, should you invest in any of these kind of new entrants 10 years ago? The answer is, like, absolutely, and probably all of them, right? So I think similar to retail, it's a kind of structural 20-year change whereby you no longer have face-to-face bank transactions. Everything is online, and it's the kind of structural, systematic reimagining of that, of which eToro and others are in the vanguard.
Yeah, unless if you try to build competitors to eToro, that's futile. That train is left.
And let me ask you, I mean, you're both global companies, but how have you sort of broken out of the hyper-local part of your markets? I mean, you started in Israel, you started in England. Are you global now, and how did you sort of navigate that transition?
So for Israelis, it's relatively easy. There is no Israeli market. So no, like most entrepreneurs in Israel automatically build whatever they do overseas.
Yep.
Historically, it was the US. But in fintech, it's actually harder to enter the US market. So a lot of the Israelis are actually entering the European and UK markets. Now, every time I need to say European and UK.
I think we have about 8 hours left before we know the answer to that one. But yeah.
So we were very European-centric to start with. Our biggest markets are still UK, Germany, France, Italy, Spain, sort of the big European markets. And then a couple of years ago, we did a fundraising from the Far East, and that took us to China, and China expanded to Southeast Asia, which expanded to Australia. And we actually just recently launched eToro in the US. So we did sort of the opposite of what you usually do, where you started in the US and then go globally. We started Europe, Asia, then the US. So out of 850 employees, we have about 12 offices scattered around the world, with still Israel being sort of the majority with about 500 people, and then scattered across a lot of our regulated entities.
Yeah, so I think similarly, we took a kind of counterintuitive and unorthodox approach to internationalization. So I think within the first 6 months, we had clients in Afghanistan, Pakistan, Somalia, Zimbabwe, right?
Major fintech hubs.
Exactly, yeah.
Yes.
So kind of
Major
hubs,
terrorist finance.
Yeah.
but also the kind of really the highest risk jurisdictions in terms of like terrorist groups and sanctions against different regimes in Mugabe and Zimbabwe. So I think now we have clients in like 70 countries, and we have hubs in New York, Singapore, London. So really the risk of money laundering, terrorist financing is biggest internationally, and it's places like Colombia or Syria or like whatever the typology of risk, whether it's political, cultural, financial, like you have to address it, and therefore it's by its very definition hyper international.
And before we continue, I want to remind the audience, if you want to ask questions to the panelists, please use the TechCrunch Disrupt Events app. You can submit questions to me up here, and I'll ask them onto the panel. But one of the questions I was really curious about, you have sort of slightly different business models. One is B2C. You're focused on reaching out to a lot of consumers. For ComplyAdvantage, you're implementing AML and KYC for large companies. How do you approach fintech when you're targeting either consumer or enterprise customers?
I think it's really about sort of a DNA of the company, what you're trying to solve. eToro's vision has always been to open the global markets for everyone to trade and invest in a simple and transparent way. I fell in love in the markets during the dot-com bubble. You know, and really our mission is to get people sort of in love in capital markets, participate in the markets, invest in stocks they believe in. So by definition, it's more of a mass market appeal, and that defines the culture of the company. So we're a consumer technology company. We iterate and launch multiple versions of the products every week to optimize how people engage with the platform. We spend a lot of money and resources on working together with Google, Twitter, Facebook on basically how do we acquire customers, how do we get the customers, around retention, around churn. So a lot of the things that you'd expect from a consumer app company, you'd expect for a consumer fintech company, and that eventually guys like us at scale become your customers.
Yeah. Yes, I think similarly to for me, having started a fintech company, the bit that I really, really hated was the kind of AML system, and I'm sure Yoni will tell you more about that, right? So, and if you look at the kind of team headcount and the investment for any fintech, it's the bit that they really, really have to deal with. It's a fundamental existential threat to them, but also it's the bit that they've never really thought they have to deal with. And so, in coming to fintech, I was like, listen, it's a really horrific, painful, evil problem. And so for me, I kind of wanted to create the solution that I didn't have when I started my company. And therefore, and I think also, given the sheer scale of the problem, it wasn't as if each company would build the system themselves. So we have like 270 people now, right? Of which the vast majority are building the platform. As in, no single company can deal with the scale of this problem themselves. You have to use a kind of shared resource. If you're a large bank and you're doing 2 billion payments a year, you might have, say, 100 million matches. And then out of that, each will cost $200. And then from that, you'll have, say, 1,000 true positives. So the kind of hugely expensive industrial process, and then the cost of actually missing a real hit is kind of billions in fines or even jail, right? So that's the problem that I wanted to solve for fintechs.
He's surprisingly a good salesperson. Take my AML problems away.
Yeah. And let me ask you, I mean, so obviously, I think, you know, in fintech, one of the biggest challenges, particularly early on, is that the regulatory system is really complicated, right? So you can go to jail, you can be fined tens of millions of dollars. Obviously, you're both really successful today, tens of millions in revenue, hundreds of employees for both of you. But when you first got started, like, how did you handle kind of the complexities of the financial system? And there was no ComplyAdvantage when you got started to sort of, you know, as an API to solve some of those sort of problems.
Sure. So first of all, we've had this transition over the last couple of years from working with one regulation in Europe to suddenly now working with 5 different regulators. So that's a big jump. And sort of traditionally, when people used to sort of build financial institutions before fintechs, like an E-Trade would go to the UK, they would start everything from scratch. They wouldn't, like, you know, these were when systems weren't in the cloud, right? They actually bought servers with pounds connected to the local London Stock Exchange, and everything was scratch. They built the same in Japan. It's almost, they took the knowledge, but everything was sort of centrally operated. When you look at the sort of 3.0 companies, everything we build is on the cloud, right? So we build one system, and then that system serves multiple regulators. So that jump was relatively a big jump for us. I think now we're also looking at different kinds of regulations because we're not only offering investments in capital markets, but also cryptocurrencies, which is a moving target of regulators, so you don't know exactly what regulation it'll fall under. So you need to employ a lot of people that sort of think in a smart way around regulation to understand how can you use your existing infrastructure to innovate. Because regulation and innovation, almost by definition, are somewhat conflicting sort of concepts or words.
Yeah, I think in starting a company 10 years ago, I think then you had to really reinvent every single component of the system yourselves. As in, I think looking at the companies that kind of preceded the large fintechs today, they had to go and build each section of the supply chain, and they had to go and talk to Visa or talk to MasterCard or talk to the banks, and they had to kind of explain precisely what a fintech was or precisely what each different part of the vertical function did. Whereas I think now there's a really established playbook. So I think in terms of the speed with which you can enter the market as a fintech, the speed with which you can gain scale, the familiarity with investors of each component is so much more straightforward that I think like launching today is effortless in comparison to what the early pioneers like Yoni had to do.
Yeah, so it's a lot about when people say there was a process of disintermediating the banks, a lot of people are thinking about sort of the customer experience, right? P2P lending, trading platforms like eToro, robo-advisors, et cetera, et cetera. So that's disintermediating the service that the customer gets. The other part that happened, which is the same part, happened to the back office. So in the past, you had 5 big banks in one country they were the ones who had their own IT, who did all of the compliance of AML, all of the compliance of all of the different functions, and it was all internally and local. Then now, when you start a fintech company, you can go to providers who will do for you AML and KYC, and you'll find in each of them 5 or 10 actually good fintech companies who provide for other fintechs, consumer-facing fintechs, a lot of the back-end functionality.
And literally, just in terms of logistics, does that mean you hire less people early on? You're paying less money in terms of wages in order to do a lot of the regulatory handling?
It's the same with technology, right? So when my father started his tech company, he had to actually buy punching machines. Now you don't even have to buy a computer. You can run a startup. Everything is cloud-based, app-based, PaaS-based. So you don't need to buy one server. And exactly the same is gradually happening. Again, this is a slower process than technology is happening with fintech. So a lot of the both front office, middle office, back office are all being disrupted by a lot of technology companies. And now suddenly you can sort of pick and choose, connect them, and just work on what you're best in.
I think the other really important trend now you see today is kind of phase one was the kind of new entrants who started with a point solution. So Robinhood would have started just with stock trading. Monzo would have started just with a simple bank account. Whereas now what you have is this kind of post-unbundling is rebundling, right? So in the same way that you had Netflix in phase one just offering a kind of single channel rather than offering a kind of bundled package of cable channels, now what you have is this kind of profusion whereby every single fintech or every single tech company is offering a debit card, right? So Apple offer a card, Google will offer a card. So the kind of next ramification and consequence of the simplification of the supply chain is that suddenly everything becomes fintech. Everyone offers everything else via resellers, right? So I think the kind of structural shifts in fintech are now moving to a different phase, which is this kind of rebundling post-point solution unbundling.
And when we talk about structural shifts, I mean, we had a panel earlier on blockchain, and both of you, I mean, you both started 10 years ago, or a little bit more than 10 years ago, but both of you have really large crypto components. I mean, in your case, you actually can trade cryptocurrencies. In your case, at one point, it was a huge part of your revenue stream was sort of the crypto world and trying to bring some, let's say, stability and order to the chaos. How is crypto looking today? I mean, are you excited about it, not excited about it?
First, I'm personally very excited about it. So the house view of eToro as an investment house, that crypto is still a very legitimate hedge against government. So fiat crisis and debt crisis of nations is not something that's going away. Negative interest rates are coming coming alongside. So from a macro point of view, we think there's a real need for a decentralized cryptocurrency like Bitcoin. Others each have their own traits. So again, as a house view, we're bullish on crypto. We believe also it should be a part of a portfolio. So it shouldn't be 100% of your investments, but it should be 2 to 10% of your investments, depending where you get in. I think from a technology point of view, I think smart contracts are super interesting. I don't think we've started to scratch the surface with opportunities of smart contracts. We all deal with complex sort of agreements between more than two parties, but the current way the legal system works is almost all agreements are two-party agreements. So if you want to do a 3 or 4-party agreement, you usually need to have basically all of them do two-party. It's really hard to do complex financial agreements in groups. I think that's a huge opportunity for innovation, but I think a lot of people are also disillusioned that it's going to happen tomorrow, right? So I think we're going to see very much similar to the dot-com bubble. So I always say there's a couple of sort of big aha moments. One is the first time I traded or bought stock. One is when I discovered the internet and BBSs. And the third is when I did my first Bitcoin transaction. So understanding that, moving crypto from one place to another, understanding blockchain is revolutionary. But where we are is very similar to 2000. We're post the big crash. everybody really, really, really wants for everything to go back into rally because they're invested in it. The people who are not invested in it say, luckily, I haven't invested in it because you were all idiots. So look, it dropped 90%, 80%, 70%. Reality is, after the dot-com bubble, we've never seen another rally, right? We've never seen another rally like the one in 98 to 2000. Gradual, sort of the entire business grow. We've seen Facebook happen, Amazon happen, Google happen, Tencent happen, sort of the internet emerge with huge businesses, and we're at all-time high of the NASDAQ, but we've never seen another sort of like uptick correction. And I think that's where we are. I think blockchain is going to revolutionize financial services. It's going to eventually change the entire infrastructure in finance. So every single asset is going to get tokenized. Every single backend system eventually is going to work on blockchains or public or permissioned ledgers. So we're going to look at the next 20 years and replace the entire infrastructure of financial services, but it's not going to happen in a day, like Rome hasn't been built in a day.
Charlie, what are your thoughts?
Yeah, so I think my vantage point is different to Yoni's in that kind of, like, say Q3 last year, we had this kind of tidal wave of crypto companies come to us, right? So I think over 100 companies, like every month, maybe 20 ICOs, this kind of wave after wave of every form of potential crypto company was kind of there. I think what we've seen the past year, maybe kind of a third of those companies have now gone bust or kind of vanished or kind of gone underwater. I think those that have survived are making great money, right? So I think some companies, like some exchanges, for instance, would have made say a small exchange would have made £20 million in profit in 2018. So they're kind of extremely well capitalized. And what we see now is the volumes are growing quite a lot, as in they're around, they're doing very well, and they're growing. So I think in terms of what that allows them to do is to invest really heavily in evolving their product, evolving the systems. And I think for me, the critical thing is someone in Berlin or London or New York actually using that on a day-to-day basis? So there are like ATMs, payment companies, but the obvious kind of really obvious thing for me was that like if you look at the like who Satoshi is, like the most obvious candidate was a money launderer or a drug trafficker who had a great understanding of cryptography. And because
I would say the most obvious one is the NSA or some government. Yeah.
So I think like if there ever was like a perfect vehicle to get my Colombian narcotics money back to Bogota, it was crypto. But not that doesn't mean there aren't great mechanisms for remittances or other use cases. But I think there is a really high risk use case which needs to be adequately
really,
maintained and
it's an open ledger with all of the transactions public, with most of the fiat gateways collecting KYC. How is that a good thing for a drug dealer?
So
it's really hard to conceal transactions in crypto.
That assumes regulated exchanges, many of which weren't doing KYC. So whilst there are good actors, and I definitely put eToro in that bucket, at the same time, there are many bad actors. There are like tumblers. There are the ability to constantly shift chains, wallet addresses. There are anonymity chains aside from the main Bitcoin ledger. So I think as a technology, there are definitely mechanisms that can be used to launder money.
I'm curious, particularly for the AML, KYC, ComplyAdvantage, is there a difference between traditional banking services and crypto and the way you address those different markets?
For us, so the key thing is, who is this entity that's coming to you to be onboarded? Has that person been involved in like corruption, bribery? For instance, Apple was fined for violating a sanction whereby one of their app developers was also trafficking drugs in Slovenia, right? So if this entity registers with a bank or with eToro or with a payment company, either way they're bad, and either way they're participating or carrying out a kind of predicate offense. So like before you launder money, there's always a crime that if it's trafficking drugs, if it's running a brothel, that money then has to be laundered and cleaned, right? So fundamentally, there's always people, and are they bad? Secondly, once you have a client, they then become bad, right? So I thought Danny was a nice guy. He gets involved with the mafia, or something bad happens to Danny, right?
Let's not talk about that on the stand. Okay, thanks.
So like, yeah, so there's their past, and then do they go to the dark side? And then there's the kind of transactional behavior, right? So if you're taking flights from Eastern Europe to London, and then suddenly you aren't buying a return flight, you aren't buying a hotel, that could mean that you're a victim of sex trafficking, right? So probably you want to alert then, right? So there's a reason why this consumes like 5% of cost and is the biggest dimension of headcount for most fintechs, and why companies are fined billions of dollars a year, why bank CEOs are being fired, is because it's extremely hard. And it's the same if you're a payment company, a stock trading company, or a normal corporation. It's really hard to eliminate evil from the financial system.
And let me ask you, I mean, you spent almost 12 years to get to the U.S. market. What took so long? Like, why not go to the U.S. right away? It's the largest stock market, a huge equity market.
Our assumption is that the U.S. is a super competitive market, and that we would need $30 to $50 million of investments to succeed in the U.S. market. When we look at comparables, right, of how much money our U.S.-based companies who are just doing the U.S., how much money they're raising. So only after we generated a significant amount of profit and raised $100 million, we felt comfortable saying, okay, we were well-financed to do the US in parallel to growing Europe and Asia. So we really wanted to know that we have the sufficient resources in order to sort of compete in that market and have that market work autonomously alongside the rest without sort of hurting the growth potential of eToro in Europe and Asia.
Do you have any comment on that?
Yeah, I mean, I'd love to be American, right? Like, American salaries are just like, I don't know how you find it, right? But like, I think a team of 100 in Romania costs the same as 20 in New York, right? Just the salaries are so crazy. So in terms of being able to launch there, and also in terms of noise, right? Like, I think in London, it's fairly easy to be very, very well known, whereas in New York, there are kind of thousands of companies, thousands of events, so it's very easy to kind of get lost in the miasma, let alone launching in SF, right? I think like people in SF don't really want to work with people from New York because of the time zone difference and because like culturally it's very different. So even for me, before you take into account like Boston and Texas and like America is more of a continent than a country. It's
you should
so
target
vast.
Wyoming.
Yeah, absolutely.
It's relatively small.
Yeah. So let me ask you. I mean, we talked about how to radically change finance, and one of the parts of that is raising venture capital. And so you both have really well-known investors. In your case, Spark. In your case, Index and others. How do you sort of approach fundraising in the fintech category? I mean, did you want people who had a deep background and knowledge in fintech? Were you looking for generalists who maybe were just really good VCs? Like, what kind of mix of people were you looking for when you were fundraising?
I think now the landscape has changed significantly to where it was 12 years ago and 8 years ago and 4 years ago. So again, when we raised funds originally, it was from angels in Israel and mostly people who have sort of background in tech, founded companies or owner of VCs in Israel. Then we sort of met Spark. I think the biggest thing sort of playing for us there was that Santo, in his background, was a trader. So that was 2010, 11 was still relatively early for fintech, and you had to find a partner within the VCs who really understood your business because he worked in finance, because he's passionate about finance. I think now it's more general, so you look at different pieces of research on the funding on fintech. I think there's, it's a clear category within VCs. There are VC partners who understand fintech and that they would understand what's happening in the space. The same in crypto. So blockchain companies today have partners and VCs who understand blockchain, investing or wealth tech, reg tech. So even fintech on its own sort of got segmented now into like 6 to 8 different segments. Each of them have expertise within the VC industry?
So I think what we do is fairly obscure and like not everyone understands it. So I think in the first instance, people had a clue what we did, and the vast majority had never heard of like AML, money laundering. Like it just wasn't a thing they ever heard of. So, but then I think also for us, it's the board members you get. So we have Jan from Index on our board. He's on Adyen, on Robinhood, lots of big companies that IPO for billions of dollars. We have Tim from Bolton, and like I think in terms of the board dynamic, like these people kind of control the destiny of the company in terms of they are determining where you go, and the choices you make will make or break the company. So, like I think Jan's been the number one Forbes Midas list of the past 2 years, right? So he's kind of has this decacorn factory, right? So what is it about him that allows him to generate such like amazing like companies? And I think it's kind of evident in the board meetings, the kind of things that he will say, or the kind of things that he'll be able to preempt, or things that might seem uncomfortable now, but actually 6 months later, they said you actually finally understand what he meant, right? So I think what you want is someone who can see the future and help you navigate that.
And let me ask you, I mean, obviously there's a huge amount of positives going on in fintech now, huge amounts of VC dollars, talent. It's actually a defined space, and apparently we sexed it up, so I'll take credit for that. But what are sort of the dark clouds on the horizon? Like, what keeps you up at night? What worries about you about your own business, about the industry, about the vertical?
I think one thing for consumer fintech is the entrance of the big tech companies. So the Facebook, Googles, Apples. I think there's a very good question and threat about how serious are they about entering this market? Do they want to? Who do they want to replace? Do they want to? Are they fighting now with Monzo and Revolut? Are they trying? Will they ever get into investing? We highly recommend that they don't. But I think that's a big question, because there's also an opportunity there. It's a threat to a lot of companies. The opportunity there is the potential M&A opportunity, because there aren't no M&As in the fintech space. You really, on the consumer fintech for sure, maybe on the back end, because you have sort of big players, and in payments, you have sort of big back end players. But on consumer fintech, you have no acquirers, because they're all banks, and banks can't buy shit because they have really bad multiples, and so they can't use their balance sheet in order to buy anything in high-tech VC multiples. So it's a space where there's a lot of money coming in to fund companies at high valuations, but the only possible thing to do for these companies is eventually build revenues and profits to IPO, unless either we become big enough to become acquirers, which we have been in the past year. We've been doing a couple of acquisitions, or the large tech companies say, okay, we're going into this fintech, we're killing the banks, and they use their multiples to start basically acquiring companies. So it's a threat, because it's really hard to compete with Google and Facebook if you look at the ad tech space, for example. And then it's opportunity, because maybe that's the path for M&As for sort of smaller fintechs who can't achieve public markets.
Yeah, so I think for me, if you told me on day one how hard it would be and the amount of things we have to go through to get to where we are today, and even now it wouldn't be kind of 5% complete, then I probably wouldn't have started it, right? As in, I think I was kind of hopelessly naive around the kind of sheer extent and magnitude of what we're trying to achieve. So I think for us, the kind of goal was to eliminate terrorism and money laundering. And I thought, like, I had a vision on day one, like, okay, we're going to build a system, it'll work like this, and we'll have these different components. And even now with 300 people and hundreds of engineers, and like, if we spend like $40 million next year, like, it's still not finished, right? And the amount of demand you get from clients in terms of, okay, we need to like handle 100 million searches a night, and then you need to, I was just like, I just thought like it would be far easier. So I guess what's worrying me is like when will it ever end, right? The amount of work to do, right? It's just crazy.
Yeah, but even if you think about AML,
Yeah.
if you would have connected all of the transactions, financial transactions in the world now, to the social profiles of Facebook and the KYC of Facebook, that would make things much easier, right? So again, the amount of information the Facebook and Googles have about us, and the level of expertise that they have on hooking us to various products, that combination in finance it has a very sort of high potential. And you can see what's happening in Asia, right? So Alipay and WeChat, I think, are becoming the largest fintech companies in the world right now, and financial and WeChat.
I mean, talking about Asia, I mean, Charlie, is that a region that you also think about as well?
Yeah, so we launched in Singapore a year ago. We already had quite a few clients in Asia. I think it's very different in terms of the typologies and concerns. I think the big concern for the vast majority of companies there is China. And do I have Chinese people laundering money? Do I have Chinese threats? There's all kinds of Asian name matching, like everyone in Korea has the same name. How do you deal with that? So I think I think it's been really interesting launching in Asia. I think the population sizes are just like massive, right? As in Indonesia with hundreds of millions of people. So versus the US, it's just like a way bigger population, but also with way smaller abilities to pay. But also it's kind of where fintech was, or kind of finance was in the West in like 1950s, as in there's no Visa or MasterCard in Indonesia. Each different bank has its own network, as in, so therefore in a restaurant you have kind of 17 different networks to pay. So in the same way that China is a kind of alternative universe where different things happen and different choices are made, like going there and interrogating the finance system means that it's a parallel universe in all different concerns.
Well, we're in our last minutes here, but you're a decade in. Obviously, like we said, a couple $100 million in revenue and in huge numbers of engineers on staff. Like, what is the next decade for both of you? Like, what's the plan? What's the dream for eToro and ComplyAdvantage?
For us, it's really another 10x. So I really think the opportunity is to build sort of the future, Goldman or Morgan or JP Morgan's. So that's where we are right now. I think today, in the next decade, we're going to build these massive fintech companies that are driven through basically a better consumer experience, that are global. So in 10 years, if you're asking people, where do you manage your money? How do you invest? How do you do deposits and savings? You're going to look at 100 different countries, and you're going to see eToro thread in the top 10 around 100 different countries. So you look at an entire industry, the largest industry in the world, other than oil and gas, and you're saying, okay, this industry is now hyper-local. Everything is going to transform into global platforms. We want eToro to be that platform for people to trade and invest in a simple and transparent way.
I think if phase one today has been to build this kind of database of like high-risk profiles like terrorists, money launderers, criminals, sex traffickers, I think phase two to solve the problem has to be the kind of inversion whereby you understand everyone and then you can only then excise and cut out the kind of high-risk entities. So what you have ultimately is this kind of terrorist financing nervous system, and you can help each company communicate with every other fintech rather than having this kind of arbitrage opportunity whereby money launderers can kind of systematically target and then move on to each company that's then rejected them. So I think an inversion and a kind of communication network.
I think what he really wants is to connect his solution to drones automatically.
Well, on that note, Yoni, CEO and founder of eToro, and Charlie, CEO and founder of ComplyAdvantage, thank you so much for joining us today.
Thank you very much, Danny.
Thank you.